Has this recent weekly close lower marked the beginning to the end to the recent bull run? Welcome to the Option Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back and relax, and let's get into it. Now, in today's video, we're going to be discussing the recent pullback that we've seen on the SPY and the QQQs. Both major indices moved significantly lower for the week. As we can see, that this was only after its recent breakout that we've seen back here when it rejected at roughly the 418 level, and we saw back around in March that it was testing this level, and then it finally has broken out. And this is a roughly a 5 to 6 week move up. Tested this level here, rejected last week's move, and now is more than 50% down on last week's trading range. This is on the SPY. Now let's take a look at the QQQs. The QQQs has a more significant rejection on major resistance level. We can see that the Qs had actually a longer bull run that took place back here in May 1st, and this is after 9 to 8 trading weeks. And this week, or the prior week, rejected at the 371 level, which coincides with the March 2022 level back here. Now, looking at the Qs is a much cleaner chart, and the weekly close was actually roughly above the 50% range of the prior trading week. So that tells us a lot that the Qs is actually outperforming the SPY in terms of price action and in terms of the bull run, suggesting that the Qs are still remaining strong. However, both indices has made its first trading week lower. Now, this suggests that the run-up has tired out and sellers are stepping in. And additionally, people who has made money on this recent run-up are starting to take profits at these levels. And usually when things start to get overexcited, the smart investors will sell off to the hype to lock in profits and pocket their money. Now we can see that these levels are strongly respected on the RSI. We saw overbought readings back here in November of 2021. And when we look at the charts, the price action that took place, we saw price action stall and eventually sold off. So these levels here on the RSI, if you're looking at the RSI, may suggest that, and if we can actually pull this forward. So if you're looking at the RSI and you take a price tool, these levels are actually respected on the actual chart itself. Levels of sell-offs, levels of overbought readings that resulted in a sell-off. So the Qs, looking at the 74, 75-ish level on the QQQs, always has marked a reading to a profit-taking event on the indices. So if we take this 75 level here and you look at the price action on the Qs, literally right after, you saw roughly a 3 week sell-off that took place. So we take a look here, back here in August of 2021, it hit the 75 reading on the RSI and the market has sold off. And again, you saw this back here. This was November of 2021. The price action stalled, moved up a little, but eventually broke down. Now, are we getting the same reading here on the Qs? If history repeats itself, it's very much so that we will pull back into a mean of reversion and eventually catch a bid on the market to entice buyers to buy back in after a sell-off. So the most wisest and safest thing to do is to prepare for a continuation down, and the idea is to position yourself wisely and follow a process whenever you trade, because the outcome is always going to be unknown. So if you're buying at the highs, that is not good process management, and it is highly unsuggestible in these market environments. So now looking at the SPY, we can see the same things appear. Now we have overbought readings on the RSI at 72. However, we are actually not there yet. If we look closer, we are getting a different type of reading. In fact, overbought readings happened back here as well in August of 2021 and of November of 2021. However, we are not actually there currently at these levels. So can, at this point, the SPY outperform the QQQs in terms of a continuation higher? It is quite possibly so. In fact, we have the MACD that is still suggesting a strong move higher. If we were to see a sell-off in the SPY, we would probably want to see a crossover on this blue MACD exponential moving average to move below this yellow line. Once we see this crossover, that is a point where we can expect a confirmed move lower on the market. But are we seeing that at this moment? The answer is no. But with a strong move on the Qs, that could influence the entire market to make the same move lower to participate in the sell-off in tech. And as we know, there's a lot of tech involved in SPY. We have Apple, Amazon, Google. All of these major indices can strongly influence the SPY. Now, if the market does sell off, what we can do is look for levels of support. The best way to do that is to actually work on a clean chart. So let's go ahead and clean this up here. So if we're looking on a clean chart, where can we see levels that was previous resistance? So if we look on the SPY, we can take this level here, back here in August of 2022, and we take a price tool and extend it to the left of the chart. And we could take that level and just mark it in the sand. Now, what we saw here on this week's trading range is that the market for the SPY actually closed right above of it. Now, being that we close nearly towards the bottom of the weekly trading range, actually suggests that sellers are still holding it strong. So can we break through? It is quite possibly so. However, at this level here is a strong level to watch, because if the market actually holds this level and buyers actually agree to the price, it can stall, and if it stalls and starts to show signs of recovery or a reversal upwards, then it could confirm that the price action is still to the upside and buyers will continue the momentum higher. So it is a more of a wait and see type of game here. But again, the idea to trading is to develop a process where you can repeat it over and over again that actually manages risk. In trading, you want to make sure that you're winning more than you're losing, and to develop a high win rate process in your trading. And that is the only way you can win at this game. It's not about being all fancy with different indicators, and um, it's really going to come down to the process that you take. And so that is what we do here, trading options, because with options you could definitely create a process and develop a price action management system. So that is what we have here. So if the market can hold this level and continue higher, that is good for the bulls. Now let's move back a little further because it's always good to have a second level of support. So let's again take the price tool and find another level of support. So let's take this area here. And again, this is all coming down to different assumptions. You could have assumptions in the markets, and it is good to have it because then it gives you an edge. But again, it's gonna the rule to all this is that nobody knows where the market is gonna go. When you enter the trade, the outcome is gonna be unknown, and that is a well-known fact for all of the successful traders that once you enter, the outcome is always random. I'll repeat again. The outcome is always random because nobody can predict the future. There could be a major news event that something happens within the United States and another financial crisis happens and the market falls, 10 points. We do not know what's going to happen. But the most important thing that you can do as a trader is identify levels that you can deem a good risk management. And once you identify those levels, you take the trade. And then after that point, you manage the risk. So for me, I'm identifying this level based off of several things. This here is a recent high. This 418, 420-ish level is a recent high that was developed and rejected on January of 2023. We saw this level also tested as a support on January of 2022. This also coincides with the moving average, the 15 EMA on the weekly chart, and it sits right here. So what I am expecting is that if this level here, this 433 level, does not hold, the market will most likely sell off to test the next level of support of 420 to 418. I'd want to see it test this level here and consolidate and then move higher. That is my assumption. So the key here is to develop your own assumption to see how things will play out. And ultimately, at that point, it's just to manage your risk. So that is what I have for the SPY. We talked over the QQQs. Now let's get into the VIX. The VIX is also an important indicator that tracks volatility. And what have we seen here? We still are seeing a downward slope on the VIX. And this is the weekly chart. And the VIX closed for the week at 1344. Now, looking a little closer, let's take a look closer to the daily chart. On this recent move lower on the markets, the VIX moved up 4% higher. Now, to me, just looking at a 4% higher on the VIX, that doesn't seem a lot of movement. If I were to see a massive sell-off on the VIX, I would like to see something a little more over a 10% move higher to indicate that buyers are really throwing in the towels and giving it off to the bears. But in this current trading week, I'm not really seeing that. In fact, the way I'm looking at the markets is more of a buying opportunity moment. But of course, you'd want to choose the extreme levels to buy into. If I were to see a move lower on the major markets, I would want to see the VIX cross over on the MACD indicator to suggest that the momentum has shifted. At this point, we are not seeing that. So again, what are we seeing here? We have the cues that on the weekly chart is actually suggesting somewhat of an outperformance compared to the SPY, considering the fact that this recent week's close is still roughly above the 50% mark of the prior week's trading range. So can tech still continue? I believe so, because tech is usually the number one sector that actually leads the market out of a recession. So that is what we have here for you today. Make sure you subscribe to this video. Make sure you hit the like button to help out with the algorithm, and we will see you on the next one. Peace.